A very good morning and a very warm welcome to Morning Mantra on ET Now. I'm Kamya Verma.
Very good morning to all, and thanks very much for starting your day with us on Morning Mantra. Well, first up, we'll kickstart the show by giving you a glimpse of what's happening across the various global markets. Yesterday, do remember, we had the U.S. markets closing on quite a buoyant note, largely driven by the Spanish budget, which signal austerity measures. Additionally, of course, Chinese stimulus measures were helping the markets. But for now, in terms of the currency markets, we've got the dollar index that's trading relatively quiet right now. 79.5 odd sort of levels is what it's clocking in. To remember, yesterday, of course, we had a sharp fall come in, and right now as well, the dollar index is seeing some bit of resistance at the 20-day moving average. It is still, however, close to 14-day highs. For the euro as well, we are seeing levels of about 129 odd coming in there. Yesterday, after the Spanish budget was announced, we had this one doing pretty well for itself. Right now, it's looking relatively flat in the session. 129.11 is the level it's trading at. Well, let's move on to the specific markets then. For Japan right now, we are off by close to a 0.5%, 89.10, just about managing to hold on to that 8900 mark. Do remember, in terms of macro data, we've had consumer prices which have dipped by close to 0.3%. This is in line with what was expected, and that's for the month of August. We've got the pharma as well as tech counters that are facing some pressure. Telecom and energy, on the other hand, is helping to prop up the markets. For the Korean markets, it's up for a second day. We've got the index still at 4-month highs. It's the tech counters which are doing well, consumer stocks that are seeing some pressure. For Singapore, we've got Straits Times that's looking up. We've got Shanghai that's still under pressure, 0.5% off. Do remember, of course, Chinese markets are trading close to 2009 lows, really. And Taiwan also absolutely flat right now. We've got SGX Nifty, which indicates how our markets are likely to open up. That's a 0.3% in the green at 5,700.
Well, let's get you some global news then. Now, the Spanish Parliament yesterday passed the budget for 2013. It is the 5th such spending cut program in the last 9 months. The highlight of the budget is the massive cut in social spending, which accounts for 64% of the government's expenses. Deputy Prime Minister Soraya Santa Maria says the new laws will bolster the country's economy and will meet the pledges to the European Union partners. The government has pledged a deficit target of 4.5% for 2013. The new plan ushers in big labour reforms and has passed restrictions on salary negotiations, and also allows the government to use over €3 billion pension reserve fund to meet its liabilities. The budget hopes that 2013 will be the last year of recession for Spain. Now, widespread protests have followed across Spain post the unveiling of the budget. George Sherian gets us more.
Well, the elements of the budget that you just saw are exactly what the markets were looking for. So the budget is high on reforms, labour reforms in particular. It's talked about liberalising the utility space, so telecom, electricity, water, all of these utility services is an area that you're going to see a lot of liberalization on. Again, something that the market was looking for. And you did see Europe close higher post the Spanish budget announcement for 2013. Now, what's interesting is after the markets closed, you had the Spanish Deputy Prime Minister talk about the government likely dipping into the social security reserves to the extent of €3 billion in order to meet any liquidity shortfall. Now, this is something that no one would have ideally liked to hear, and you did see the euro drop sharply post that announcement, post that mentioning in the press conference by the Deputy Prime Minister. So that's a negative. But going forward, what the markets will really be looking for is tomorrow on Friday, when you have the bank recapitalization, the bank audit of Spanish banks being put forward. They will get a sense of what the recapitalization needs of Spanish banks are. And more importantly, what the markets really are waiting to hear from the Spanish government is that they do need a bailout, that they will approach the EU authorities and seek a full-blown sovereign bailout. That's exactly what the markets are looking for. So today's budget announcement show a positive to some extent for the markets, but two more key events that the markets really are waiting for.
Well, we did have the European markets that ended the day higher, and the Spanish budget announcements came towards the end of it. Mariam Bernard at Reuters gives us more details.
While European shares certainly trimmed earlier gains, despite Spain unveiling its highly anticipated budget, it fell short of steam. There's still a lot of uncertainty about if and when Spain could ask for aid. Spain's IBEX down 0.2%, the Stoxx Europe 600 index up more than 0.5%, along with the CAC up 1%. But the euro is feeling pressure, extending losses against the yen. The Spanish government announced the new budget will be based on light recession next year, the focus being on cutting spending rather than hiking taxes. Overall, indices and benchmarks doing pretty well on the back of actually China hinting at new stimulus measures to boost growth. We saw a record $158 billion injected into money markets this week, very much pushing up miners with hopes of more Chinese demand for metals. But we're seeing disappointing data out of the U.S. following weak numbers for new orders for U.S. manufactured goods and final lower Q2 GDP figures.
Well, let's get a perspective as to what should you be understanding of all the news that's coming in. For that, we are joined by Andrew Ferris, who's the Senior Investment Advisor for Asia at BNP Paribas Wealth Management. He joins us on the phone line from Hong Kong. Good morning, Andrew. Good to have you with us on Morning Mantra.
Good morning.
Now,
I'm afraid I have to correct my title for compliance purposes. I'm the Chief Investment Advisor for Asia for Wealth Management, BNP Paribas. Okay, questions, please.
Apologize for that. Let's move on and ask you the query regarding the same. Now, there are hopes that the budget plans unveiled by Spain will help the debt-ridden nation tide over its debt crisis. What's your outlook for that?
Well, what I'm really looking for today is the report by the independent group on the recapitalization of the Spanish banks. Rumors have it that it's going to be well below the 100 billion that the European Union has already allocated, and the European Union in all probability will allow Spain to use any of the residuals. And that will be, let's say, a happy coincidence because it is money already on the table and Spain doesn't necessarily need to ask for it. And also, if the recapitalization needs of the banks are below what has been expected, that is also another piece of good news. Now, as far as the budget is concerned, usual stuff, increases in taxes and decreases in expenditure. That's the only way to cut the fiscal deficit, incidentally, okay? So that's not a Nobel Prize winning suggestion.
Andrew, morning. 4.5% is the sort of fiscal deficit that the Spanish government's working with. Given the state that the economy is, how feasible or how achievable that target is, A, and B, a large part of the budget cuts are coming in the form of social spending cuts. So given that we've already got unrest underway, do you think this is actually going to work out?
As usual, everything is doable and everything is possible, okay, on the assumption that people are willing to make it work. And you are absolutely right in pointing out that the Spanish electorate is getting more and more fed up with the continuous cuts. Now, what might be a combination, and this may be Rajoy's ploy, possibly, because he has been incredibly reluctant to ask for money. Now that he has put on the table a plan that would potentially meet European Union expectations, then he might be able to make his life a little bit easier if this is projected to the European Central Bank promise that any economy that undergoes an approved, in inverted commas, plan of restitution, of reform, then the European Union may step in and loosen up on bond yields. Could be good news because, of course, the interest payments on Spain's external, in inverted commas, debt is a very important part of the budget, and that might be lifted or loosened or lightened up if, in fact, there is a combination of the budget going forward and also the European Central Bank agreeing to step in for the first time.
And there are speculations that China's government will do more to prop up the growth. What are your expectations from the same?
Well, actually, I don't need to have any speculations. They have already, nearly a month ago, announced approximately 250 billion worth of infrastructure projects, something like 60 projects, of which nearly 50 of them are transport-related. Of course, they cannot be injected instantly into the economy, but they will start ASAP. Back in May, June, July, the government cut interest rates and reduced reserve requirements, so they are already taking some loosening action. The next stage, of course, will have now to wait the transition to the new political administration, because I don't have the slightest doubt the current one doesn't want to bring forward a slew of measures that the next administration will then have to take over and therefore commit itself on it. So the answer is yeah, there could be a few more things coming along the line.
All right, Andrew, we'll leave it at that. Thanks very much for taking out the time and sharing your perspective with us on Morning Mantra.
Okay, let's move on then and get you more details on how exactly we wrapped up with trade on US markets last night. It ended up being a relatively good session, despite the fact that we had the Q2 GDP numbers being reiterated and actually being scaled down to about 1.3% at the final go. So for yesterday, we had the Dow Jones that added on close to 0.5%. In fact, for the S&P 500, finally it managed to stem that losing streak that we've had for the longest time, just a shade below that 1450 mark. So 1447 was the level it closed at. Tech-heavy Nasdaq added on a good 1.4%. Multiple factors actually working in favor of the markets. The volatility also eased off a bit. We had tech and energy doing well. Utilities, however, came under some pressure yesterday. The fact that there was Chinese monetary stimulus, which was unexpected. We also had the Spanish budget cut and reform measures being announced that also provided support. So in terms of specific movers, we had a GE which rose close to 2% after the company reiterated its 2012 forecast and in fact raised that. In terms of the movers for the day, in terms of macro data, well, we had the durable goods number for the month of August that dropped close to 13%. The jobless claims number also for the country came in at the lowest level since July. So all in all, a good day.
All right, now U.S. gross domestic product in the second quarter grew at an annual rate of 1.3% in the second quarter, down from the previous estimate of 1.7%. Growth between April and June has been revised downwards. Now, according to the U.S. Commerce Department, one of the reasons for the cut was the worst drought for 50 years, which cut farm inventories. Official figures showed that the durable goods orders fell 13.2% in the month.
The job situation here is lousy, but it's not terrible. So it's not worsening. We're seeing 100, 150,000 new jobs a month. We do need 120,000 each month to keep pace with population growth. In a weird way, with the Fed on standby and committed to QE3, QE4, whatever it takes, then you might actually begin to interpret negative macro news as either a non-event or a slight positive. In other words, we'll get more inflationary, expansionary monetary policy.
Okay, let's move on then to Europe. And Greek Finance Minister Yanis Strounaras has said that the three parties in the country's governing coalition have reached a basic agreement on the austerity package. He stated that there were very few details to be worked out on the austerity package. The measures are likely to be presented to Greece's international lenders on Monday before going before the parliament. Now, the cuts are necessary if Greece is to continue receiving bailout funds. The spending cuts are reported to be worth at least 11.5 billion euros and are a condition for Greece to receive the next tranche of aid.
Well, Italy's Prime Minister Mario Monti has stated that the euro currency bloc is extremely important for the region's economy. He also said that the European Central Bank should not impose extra economic conditions for its bond buying mechanism and the International Monetary Fund shouldn't have an oversight rule.
Although the euro has been associated with a number of turmoils recently. Take the case of Italy. The euro brought to Italy a single currency shared with all the others. That is very important economically, simplifying life for businesses and citizens. That's all for the good. But that is not the most important part. The most important part is that the euro is the tip of the iceberg, and underneath you have a whole set of rules of governance, budgetary discipline, one central bank conducting monetary policy in a spirit of independence targeted against inflation, you have rules about budgetary stability and so on and so forth.
Okay, those positive developments in the Eurozone are also helping the commodity markets, and what exact levels we're trading at? Let's get you a check on that from Megha Memoria. Megha, morning. Let's first start by talking about crude, which is finally seeing some ease from those 6-week lows, really.
Well, Megha, very good morning. Not just crude, look at the entire commodity pack after Spain yesterday approved its 2013 austerity budget. We are seeing a strong rally coming in for the entire commodity pack, and ditto for crude after a significant day of a couple of days of decline. We are seeing a tick of green coming in for crude. In fact, it gained close to 2% yesterday, posting the highest gains in the last 2 weeks there. It's trading about, technically also it's looking strong, trading about the 100-day moving average. Brent is trading about the 200-day moving average. So the going is good for crude. Apart from Spain, what's really impacting crude is the fact that U.S. Personal spending has increased, leading to speculation that the demand for crude will increase going forward. Also, there's a speculation that China will take steps to bolster its economy, and that is providing a sentimental boost to crude prices.
Right, and Megha, tell us what's happening with the metal side, because we've got base metals rather, which had a good day on the back of those austerity measures being announced in Spain.
Well, Megha, both base metals and precious metals have done well for themselves. Both of them have gained. In fact, we are seeing strong buying coming back in gold and silver after the correction that we witnessed in the last couple of days. You know, correction has led to buying coming back in gold and silver. There are strong gains coming in. Gold is trading at a 7-month high at this point of time, so very sharp gains coming in. Silver doing well for itself. It has, in fact, gained for the 3rd consecutive day now, hovering at the 34 kind of levels. Gain 2% yesterday. There's speculation in the market that with the central banks globally going for stimulus measures, it will lead to weakening of the economy, weakening of the currencies globally, and that is in support of gold and silver prices there. Also, look at the base metal pack. All of them have posted marginal gains on the LME yesterday, essentially on back of Spain's news there. But there's still a bit of negative building up for the base metals, because there is still concern in the global markets that the slowing demand in China will impact the base metals pack going forward.
All right, Megha, thanks very much for running us through all those updates from the commodities pack. Well, let's get a quick check on the currency pack then. The rupee gained 49 paise on Thursday to end at over 4.5-month high of 53.02 against the dollar on heavy selling of the American currency by exporters and some banks. Forex dealers said dollar selling was so strong that some weakness in local equities and also in the US currency overseas did not have any impact on rupee. The local unit logged a low of 53.55 in early trade. However, heavy dollar sell-off by exporters and some banks amid continuing signs of dollar inflows by foreign funds helped the rupee to bounce back to a high of 53 before settling at 53.02, showing a rise of 49 paise or 0.92% from its last close.
Well, let's take a look at what exactly happened with the Indian markets yesterday, because it was, of course, the expiry for the F&O series, and what an expiry it has been. In fact, 6.5% higher is the numbers we've clocked in for this series, and today, of course, it's the last day of the month of September as well. So yesterday specifically, we had the Nifty slipping for a second day. In fact, the index is at about a 4-day low, pardon me, but still 7.5% higher for the month of September alone. In fact, this gain really has been the best one that we've had since the start of this year. In terms of the big movers then, we had a BHEL, M&M and ACC, which are the top gainers on the Nifty on the 5-day basis. And for the month of September, high beta pocket, JP Associates, Bank of Baroda as well as PNB are the big movers. But what really stands out and what you should keep in mind is that for the month of October, the month that we will be kicking off from next week, traditionally and historically, we've gained in 6 times and 12 times we've seen a cut come in for the index in the past 18 years. So that's a big, in terms of probability, the chances are that we will see some bit of volatility as well. The markets continue to remain very volatile for the month of August and for the month of October, and generally the gains are between 2.5% to about 17.5%. Whereas in terms of the losses, we can see cuts of anywhere between 1.2 to 26.5%. This, of course, is historical data. So with that, let's then get you a sense of what's likely to happen with the markets today. And Prakash Gaba is here with us for just that. Prakash, morning. A great end to the September series yesterday. We've got the last day of the September. Going on today. We are going into the weekend as well. So do you think volatility is likely to be the key today as well?
Yes, looks like so far. You see, structurally, when I look at the market, it's still up. There is no sign of weakness. Last 4 trading sessions that we have seen is more of a corrective down move after a massive up move that we saw on a Friday. So everything looks okay. But on indicators front, it tells me that maybe there's some kind of selling pressure closer to around 5,700 zone. Now, if the market has to go up, then it needs to cross 5,700 zones convincingly. And if that happens, what do we see in future? Maybe a levels closer to 5,810 to 5,870. So structurally, there's an up move in place, but needs to confirm. And for that, 5,700 is an important level. So if it trades below 5,700, there could be some selling pressure. And on the lower side, perhaps we could see closer to strong supports, closer to around 5,600, 5,650. These are the zones we are having. But so far, it's in correction mode.
Mr. Gaba, which sector do you think will be in the limelight today?
Looks like FMCG is looking good to me. ITC and Hindustan Lever included. I would say HUL is looking good. Has a very strong support in the levels of 530 or so. Time go up, inch up to closer to 550 zone. It's more of a defensive play coming in. So is the case with ITC. ITC is finding strong support around levels of 260. But on the upper regions, closer to 270, 272 zones. It's likely to find some kind of pressure. Defensive seems to be up. Some selective banks like Dena Bank, State Bank, UCO Bank, and Yes Bank could go up. But the other market, that is the other side of the market, looks like there is some kind of a pressure coming in there.
Prakash, we'll also have some nifty changes kicking in today. So Lupin and Ultratech are going to get added, and they did well for themselves yesterday as well. So how would you play these new entrants as well as what you're recommending this morning?
As far as Lupin is concerned, I think Lupin so far looks good, can climb to levels closer to 620, has a very strong support around the levels of 590. So one can trade long, but still looks more of a reactive up move. That means there's a limited upside on Lupin. As far as Ultratech Cement is concerned, we've seen a massive up move backed by the entire cement pack coming in. It can climb to levels closer to 2,000, less of psychological resistance. So I would say that as Ultratech don't take fresh moves, but certainly one can continue holding it with a trading stop and chase it with a trading stop. So it's up. But today, looks to me that I would like to buy Bajaj Finserv. Looks good to me. Structurally positive. 840 seems to be a very strong support zones. On the upside, we could see levels closer to 888, 890 zones the days to come. I also like Opto Circuit. That's the stock actually make or break levels. 127, 128 seems to be a strong support zone. If it survives here, we can see levels closer to around 136 to 140 in the days to come. It's make or break. It could actually crack from here or go up from here. Looks like it can go up from here, Opto Circuit.
All right, Prakash, we'll let you go on that. Thanks very much for giving our viewers all those trading strategies on Bajaj Finserv, Opto, as well as Ultratech.
All right, with that, let's get a quick check on the F&O side of the market as well. Darshan Mehta from our research desk now joins us to tell us how the September series really panned out. So, Darshan, how was the closing?
Well, we ended at 56.50, was lower than what the street had anticipated, but clearly rollovers on the Nifty side is pretty much an average with what happened last month, the 3-month average, but the Bank Nifty rollovers have been a little disappointing. But remember, from today, 51 stocks will be lesser as far as the entire F&O list is concerned. There is the Nifty rebalance that will happen today. So a lot of action will happen on the F&O. As far as where the option data was, if you're seeing the October series, there is call writing that is going on at 5,700, 5,800 levels, which indicates the resistance, and on the support side, put writing is happening at levels of 5,300 and 5,400. So the range is broader. 5,300 to 5,800 at this point at the start of the series, the range that we are mapping out for the October series. Apart from that, yesterday HCL, L&T, HUL, all these counters gained in trade. SAIL and Sterlite were the two exclusions that were out of the Nifty. They fell in trade. United Spirits was the biggest gainer on the CLSA reports, and Voltas dropped on brokerage downgrades. What you have to watch out today, obviously all the pharma stocks because of the new drug policy. GSK will be impacted the most, followed by Cipla and Ranbaxy. So these will be clearly in focus. Apart from that, the Nifty rebalancing will happen today. So those counters, so Lupin, Sterlite, SAIL as well as Ultratech, all of them will be in focus today.
Darshan, also give us a sense of what happened in volume terms, because I believe